I'm Greg Galeaz. I lead PwC's insurance practice in the U.S. And with me today are Leslie Fenton, Ritendra Roy, and John Marra from our deals team. Profitability and growth continue to be a challenge within the industry. What are we seeing in the deals market in the first 6 months of 2016?
Well, I don't think you see the same sort of fanfare you saw in 15, because 15, they caught the big headlines with the big announced transactions. But much more quietly, we're seeing just the same level of volume and a lot of the same objectives for clients that are investing. And I think the other theme we continue to see is a lot of foreign investment and PE investment.
I see a lot of upcoming events in terms of mega IPOs, which was quiet this year. So you have Athene and Ironshore who have announced and filed for IPOs, as well as AIG for its mortgage business, and then the big MetLife carve-out of its retail business is again upcoming. So there will be some mega deals to look forward to.
With all the challenges our U.S. clients are facing, what are they doing to be competitive in the deal space?
Well, to be honest, what we're seeing right now is a lot of U.S. clients are much more interested in disruptive technologies and ways of changing their business than we have ever seen before. In fact, a number of companies have set up special venture funds to participate in some of these disruptive technology companies. It's very interesting.
What do those venture acquisitions get our clients?
Well, I think those venture acquisitions, the intent of those types of transactions is to drive costs out of the system, to have a more current technology and probably an easier and more efficient way of touching the consumer.
And I do think one of the reasons that a company is going to make an investment in a controlled venture fund is that they want preferred access to that technology. They want to get the mind share of that disruptor group. They want to make sure that if they're doing Internet of Things or some new distribution technology, that they can not only get a return on the investment, but also figure out a way to revamp their whole system.
Driverless cars,
Absolutely.
Other technologies
Right.
that are disrupting the business.
Right.
I would say it in one word, which is revenue replacement. They're very concerned that technology is going to take away large chunks of traditional insurance premium. So a big focus of the technology investments is revenue replacement.
And as John mentioned, what we are seeing in the life insurance business is focus on digital. Everybody is trying to figure out how they will be able to work with the millennial when that generation starts to buy risk products, and their approach to buying products is totally different than everyone else's is. So it's a very interesting time.
One of the topics I continue to talk to our clients about are the sale of legacy books of business. And we've seen a lot of activity in the first 6 months along these lines. Leslie, what do you see?
Well, I think the reason that you're getting responses about legacy books of business is that companies are thinking about what their core competencies are. In order to focus on digital, you don't want to worry about the stuff you have in the closet. You want to clear it out and use your capital to build new business.
You know, I think these are complex transactions, and to be a prepared seller, there's a number of steps that we see that need to be taken, right, in terms of having the financial trail, a lot of times having a sell-side appraisal, and a lot of times having a story about how that would be carved out or transitioned out of the bigger enterprise and supported for a perhaps non-traditional new buyer. And we see a lot of different strategies employed by buyers to sort of affect these transactions. And again, they're complex transactions, but I do think remainder of the year into 17 and 18, we're going to see more activity.
So from a brand perspective, what we are saying is insurance companies really need to focus. Their customers are changing, and technology is really driving them to be much more narrowly focused on products and be focused on the new digital customer who can access these new products and the new risks, be it cyber risks, be it because of the gig economy, people buying workers' comp only for the period that they're employed. So really focus on the brand and the consumer that they're serving. And what it implies is really focusing on the core and not getting distracted by legacy businesses and legacy issues.
And I think the other thing it enables a company to do is better message to the street, to their existing policyholders, to regulators, to rating agencies, what do they look like going forward? A lot of these companies have had these blocks of business for a long time, and they're still material, and they still are part of their quarterly story, their annual story, and frankly, probably for a lot of companies, a distraction.
The deal market in the U.S. continues to be exciting. It's not necessarily your traditional buying and selling of companies, but there are a lot of different factors. Companies getting into new technologies, companies simplifying their business, focusing on their core competencies, and we see this going out several years. So continued exciting times in the insurance space.